Let's get in an initial word from Vineet Bhatnagar, MD of Phillip Capital. He joins us right now on the show. Vineet, great having you. Thanks so much for joining in. Just a word on the trade, Vineet. Since we've had 4 days of a downtick and we're expecting 2 key events on the local and the global front midweek, how would you approach the benchmark indices from a trading perspective?
I think the way the build-up is looking, especially in the Nifty options on the put side, it's quite clear that the market is expecting 6,000 to hold, and therefore a lot of support is visible at this particular strike price. So at this point in time, this morning, our preferred trade will be a long on the volatility, because as you rightly mentioned, there are 2 events that are around the corner. So volatility should move up from the 1670 range that is visible at this point in time. So go long a straddle of 6100 strike.
Vineet, what is the sense that you're getting about the bank Nifty, the kind of selling pressure that we've seen last week and in the run-up to the RBI event? Do you think banks will continue to languish?
I think they would, but at the same time, I think the freedom that the Reserve Bank would have in terms of doing anything other than increasing the interest rate, with the backdrop of what we saw for the inflation as well as the decline in the industrial production is perhaps already factored in, and which is the reason why we saw a great amount of compression as far as all the banking stocks were concerned. So my sense is that if the news does come about, which is in line with what the street is expecting, there should not be any dramatic decline as far as the banks or bank Nifty as an index is concerned. That seems to have got priced in. However, if the other thing, which is the Fed tapering, which to our mind is not factored in completely, does come about with with a taper number on the monthly basis, which is higher than what what has been read everywhere, then there could be an all across the board kind of a decline, in which case I guess banks will also suffer.
Okay, Elder Pharma is soft in the session today, down close to 5%. I know that's not an FNO, but the pharma space at large, Vineet, has been extremely active. An Aurobindo Pharma, massive move. Some of the others like Dr. Reddy's too, not the best of moves, but they've been active. Biocon at new highs. What do you like in the pharma space?
I think there has been a continued strength and activity that we have seen over the last several weeks as far as Aurobindo is concerned. There is some spurt of activity that one saw even in Ranbaxy. There seems to be a greater conviction that going forward, and not in the immediate term, but going forward in the next couple of quarters, Ranbaxy should actually, really address the concerns that the FDA had raised, a few times in the recent year or so. And that actually will perhaps become the defining change as far as the new management of Ranbaxy, as far as the future of Ranbaxy is concerned. So Ranbaxy actually looks very good if one has a 1.5 year kind of an outlook to add to the portfolio.
Vineet, how would you approach names like Tata Motors? Because that one has had a fairly volatile ride. While we saw some bit of covering coming in Friday's session, but the overall data as well has been a little bit negative by way of their global wholesales figures.
I think yes, Tata Motor, shall I say, at one point in time the street was not able to factor in the JLR, factor. And now, now that everybody knows about the JLR related, upward momentum or, re-rating, if you will, as far as Tata Motors is concerned, heads have started turning in terms of looking at, how the sales of JLR is coming about, and more analysts are actually coming out to cover what exactly is happening to JLR in China, for instance, and that is where I think the conviction with which a simplistic view of a one-way move for JLR and therefore of Tata Motors in the onshore market was concerned seems to be now taking a more realistic stand. So combined with the fact that the domestic sales or the domestic pickup is still muted or unclear, the street is getting a greater or a better handle on what actually gets contributed by the JLR. So, that's where it is. In fact, we ourselves are trying to get a handle on the China story as far as JLR is concerned just this week, actually today.
Okay. The other set of stocks which will be extremely active and more dependent on what crude does would be the oil marketing companies, possibly even ONGC. And not that they haven't been active with crude doing what it is. What's the scenario there? What is it that you're factoring in, keeping in mind the crude price movements?
I think there has been some amount of lid on the crude prices is concerned, and we are all seeing that quite evidently over the last 4 weeks or so. So there is no runaway risk that one is factoring in or one is looking at as far as the crude is concerned, and therefore the benign impact that it would have or it has on ONGC is quite visible. But at the same time, one is not looking at a sharp decline in the crude prices and therefore a corresponding upward move or a strong upward move in ONGC. So it would remain stable, to slightly uppish, and that's it.
Vineet, last week has seen a re-emergence or rather comeback of IT names. What is it that you like for a buy from the IT pack?
I think TCS was looking rather stable. HCL Tech was looking all right. Infosys was also looking all right. I think all of it is really on the back of the batch of economic data that is coming out from US and Western Europe. At the same time, it is that period where one is anticipating that there will be a consistent good news that will come out, but there are still confusing signals that come out even from markets like US. So one saw that the latest batch of data that came out was a bit confusing, and even Thursday last week was a bit nervous session for Dow Jones in New York. So that being the backdrop, I think it is lending itself to a supportive price movement as far as the frontline Indian IT stocks are concerned. And if the defensive come back in fashion, in the backdrop of anything that we see as far as interest rates are concerned or QE tapering is concerned, then again IT will take the front stage. So people are holding on to it, perhaps adding on at attractive prices if they decline a bit.